Hi, my name is Michael Canet of ProStatus Financial Advisors Group. Each week I help viewers just like you create and grow wealth, protect and preserve it, and distribute it in the most tax-efficient manner possible while alive and after you pass. Those are the three pillars of our practice: to grow, keep, and leave your wealth. Our purpose here each and every week is to make you a better informed investor, to give you ideas and information that you might not see in the mainstream media. There's talking heads everywhere. You can tune into that anytime you want, but if you want real information that's usable, that hopefully leads to better investment results, but certainly less risk and makes you a better investor along the way, tune in here each and every week. This week there was some interesting information coming out of Europe. If you think back, the market did pretty well last week. We had a nice little run-up. It was all based upon the ECB announcing that they were going to bail out the failing countries, specifically Spain, Greece, Italy, and they were going to step up their game and basically buy bonds so that Spain and the rest of the country, the European community there, would have enough cash flow and enough credit so that they could continue floating their governments and then paying their bills. Well, the ECB said they were going to do this, and the market rallied tremendously. And then the ECB came out and said, but we have some rules in place. And when the rules came out, they're pretty austere. They basically told Spain and Greece and Italy, you're going to have to crack down. And the interesting thing is that Greece and Spain and Italy all said, you know what, we're not going to follow those austerity measures. We can't do what you've already asked us to do, let alone become more austere. So it'll be interesting to see what happens. I don't think the ECB is going to be the ones living up to their end of the bargain. I think the ECB is going to end up caving in, and Spain and Greece and Italy and the rest of the European community will not be borrowing rates at 6 and 7 and 8% like they're doing now, and the ECB will actually cave and give in. Some other information I thought that was interesting out there: China, serious problems in China. Their exports to Europe dropped over 16%. Their exports to the United States are dropping dramatically, and that does not bode well for them. China needs 12 to 14% growth to keep their people and their population happy, and they're struggling at 6 to 8%, and that's what they tell us. Furthermore, the Chinese banks know they're in trouble. They had the same real estate boom that we had. You can go online and look at Chinese cities, ghost towns in China, and you have whole towns that are built around this incredible infrastructure, and they have police officers directing no traffic because there's nobody on the streets, because nobody lives there, because nobody can afford to pay the bills and pay the expenses. China has serious problems. They're going to have to bail out their banks just like we did. They're going to have this huge real estate bubble just like we did. And as that continues to deteriorate in China, look for problems there. Their economy will continue to deteriorate, and if you're in China, you need to be careful. The other thing that you need to think about as far as China goes is that they rely a lot on our soybean and corn production being sent over there. That's one of their major purchases from us. And our soybean and grain and corn production is down huge because of these summer storms and the droughts. That also is going to impact China. So we have some interesting things out there. Be on the lookout, pay attention. The market is feeling better, but the circumstances and conditions out there hasn't changed. This is Mike Canet. Thank you very much for listening in and watching. We'll see you next week.